Welcome to the Trading Market Technicals morning call video for Tuesday, December the 3rd. Did get a pullback yet again at the end of the day, and I showed that to you on the charts yesterday. We had some sort of a pattern forming. Sell programs are hitting the tape late in the session and creating some sort of a reversal. Dow Jones down 77. At one point, we were up 40 to be down 40 to be up 40, and now actually ended up down 77, pretty much at the lows of the day. Nasdaq down 14, S&P down almost 5 points, and then Russell 2000 down about 12. And again, if you look at the 10-minute chart of the SPY, we see some selling starting to develop again at the end of the day. Aside from the 2 days going into the Thanksgiving holiday, we had a sell-off here, sell-off here, sell-off here. And now, if you look at it, now again, it's just one day, but we are getting a sell-off earlier and earlier now. This actually happened a little bit earlier. We had started getting one somewhere right around 1 o'clock. Markets bounced a little bit here and then actually sold off again into the close at the end of the day. So very interesting developments. And again, one day does not make a trend, but we need to understand that we do see some selling coming in the marketplace. And it's pretty much at the end of the day. So we are going to take it one step at a time, but I'm starting to see some really, really major cracks starting to form here, which is starting to entice me. Yesterday I mentioned in the E-mini at the end of the video, watch the 1797, and I'll show that to you on the chart segment, that we actually hit it. We actually went through it, came right back, and then bounced, pretty much closing up a couple of points from there. So 1797 in the ES mini contract, the December contract, is actually going to hold true here. So let's keep an eye on that for today's trading. But let's go run through the indicators. I'm still looking for the new highs, new lows. As you can see here, we're starting to roll back over again, but you see we're making lower lows and lower highs here. So not good, but we're still above the zero line, so that still tells me that there is some buying going on. But look at what's happening here. We're starting to really starting to break down with some of these key sectors. Now, on top of the key sectors, you're going to have your selective stocks within the key sectors. There's only a few that are actually moving. If you keep looking, if you run through these different sectors, you'll have one or two, maybe three key stocks that are actually moving. A lot of the stocks still are not moving. If anything, they're starting to break down a little bit, and that's something that's very interesting at this point in time. Now, at the moment, while I'm recording this early in the morning, we are flat. The E-mini S&P contract, we were up about 2 handles, and now we're flat. Can't even get it bounced. I do want to state, and I want to point out, very important, today we have 2 POMO auctions, permanent open market operations, which is the Federal Reserve. That's when they buy assets in the marketplace, and that's obviously part of QE. So we have 2 of them today. Okay, so that's going to probably put a bit into the market. But then when that's over, which is usually early morning, right after the market opens, somewhere, I guess, around 10, I believe 10-ish. You could look that up if you just Google POMO, and you'll get a calendar of it. But I believe it's between 10:15, 10:30. It does vary. But keep an eye on that. You got to keep in mind, if you're looking to get short the market, again, let it break the 1797, and then look for an entry in that sector or the spiders, what you're trading or looking to get short. But again, POMO, keep in mind, 2 auctions today, so that's going to be flooding the market with liquidity, and we'll at least put a bid into this marketplace until at least it's over. And that's what's been happening, right? We're getting POMO almost every day. The Fed's coming in, pumping dollars into the market, but at the end of the day, they're actually reversing. So let's see if this if we get a little bit of selling that comes into the marketplace and starting a little earlier and earlier. Remember, pattern recognition is key here. And again, my guess is that, we've actually had the Santa Claus rally since October 9th. We've been rallying up every single day, aside from a couple of small down days. To me, I think the Santa Claus rally has happened and is actually transpiring as we speak. So a pullback here. Now, if we get a good, healthy pullback in the marketplace, somewhere, north of like 5%, And then at the end of the last week or two of the new year, of the end of the year, we may get a little bit of a bounce going into that end of the year. But remember, we do have tax selling coming up as well, so that'll play some sort of a role. So just keep that in mind. It doesn't always have to happen. And since we've had a major, major bull run of 2013, aside from even the October 9th lows, you have to be really weary that the markets cannot go up every single day without some sort of a good pause consolidation or even some sort of a healthy pullback, which would be healthy for the markets. Okay, so let's get back into the indicator. Just wanted to make that point to you guys. Just please be aware here. If you are long, tighten up stops. If you are long for the longer term, you may want to buy some protection. Protection is still cheap. Okay, so speaking of protection, let's take a look at the VIX. As you can see here, the VIX actually we started contracting here in a Bollinger Band, so we're starting to tighten up here, and we are now making a higher high off the stochastics, and our MACDs are turning positive here with a crossover buy signal. So to me, the VIX is starting to get active now. We do have a confluence area of resistance, which the 200-day moving average, along with the 50-day moving average. So another break, maybe a back test, and I think the VIX could be really set to move much higher here. Now, reasoning why is, if the VIX moves higher, we're going to have obviously selling coming in equities. Okay, so just keep that in mind. I'd be watching what the VIX does. Take a look at the end of the day tick. End of the day tick, again, making lower lows and lower highs, still above zero, but watch it. Once it starts to break lower and stays lower, even if it gets back above zero, but barely, and then starts to break lower again, that's also another sign that we're deteriorating in our breadth of the market. Okay, New York Stock Exchange new lows. As you know, I'm watching this. This is going to be really a big indicator for me. We're making higher highs, high lows. You can even see this as an inverted head and shoulders here. Head, left shoulder, right shoulder, and your neckline straight across. So we start breaking down in the market, and this starts to break higher. This is going to be a really good telltale sign that most stocks are moving lower, and we are probably going to have some sort of a sell-off here. Take a look at the New York Stock Exchange, new highs, new lows. Oh, actually, I showed that to you already. Stocks above the 50-day moving average is what I wanted to show you. Okay, take a look here. We are, again, on a sell signal here. We've been chopping around here pretty much of October, November. Now we're going into December. We do have a sell signal right here, and this is a lofty area, and usually happens when the markets start to sell off. So, again, keep that in mind. Remember, price is what pays, but you just need to understand that we are starting to get sell signals on a lot of these key indicators. Okay, take a look at gold. Gold really just broke down, really just fell out of bed yesterday. And again, this is another good indication. A good sharp sell-off in gold. Sort of actually is going to start retesting these lows here at 1180, 1150. Big engulfing candle, and as you can see, that head and shoulders candle just really never got us to get in, because we were looking at that 1380, literally ticked there once and started to roll over again. So I've been looking to get short gold, or definitely bearish in gold for months now, and still am bearish in gold. Now you really can't chase gold here. You'd have to let it get a really good bounce back into the 1280ish area. I don't think that's going to happen, but if it does, that's going to be a good area to be short gold again, right back into this neckline here. If not, then I think you're going to be looking to be a better buyer of gold here. And it makes perfect sense here. Just see the waning of gold hedge against inflation, while the dollar's starting to get bid up here. So, gold lower is levels of risk liquidation theme. So, I mean, that's can't deny that. And this is, if gold really starts to crack, you'll see equities start to follow as well. So, again, I like gold short, but not at these levels. No trade in gold. Be a better buyer of gold somewhere around 1100 to 1150 to 1000 would be a good spot for a really good dead cat bounce. Gold, remember, in the long term is in a bear market in gold. Okay, so take a look at USO, and then I'll get into the chart segment. Now, we have a sell signal in a bullish percent energy. Okay, so that's not good, and we are at these lofty levels. However, the crude oil, which was up about 45 cents in the early morning session on Sunday night into Monday morning, actually recovered and broke to the upside, closing up higher, and now is up about 31 cents. Not much, but remember, when you get really extended to the downside, you're just going to get that bounce back higher again. And I'll show you the USO in the chart segment. Okay, so now let's go into equities real quick. Now that's why I say to use caution, because we are at major extensions. We're at the 1272, the 1618, and we literally another, I think another 12, 15 points here. We were at the 216 extension on the daily chart here. Very extended, grossly overbought. But as you can see, we have some bullish symmetry. The 8, the 20, the 50, and the 200 all pointing higher, straight up, not even curling down. A little bit with the 8. But if you look at the monthly chart, now this is a serious extension, guys. 1272 extension coming in at 1840. I believe, I'm sorry, 1840, let's call it, 4042. Look at the extension. This is from the March 2009 low. This is a monthly chart. Now, if you can't see that we're getting extended, this is crazy. I would never look to buy stocks or add to any positions in here unless you're buying a stock that actually just sold off and is at a major support area. But other than that, I would not be chasing any type of stocks that are up, 50, 60, 80, even 100%. So use caution here. This is definitely something that when markets get stretched and we're at extensions here, usually kind of caps the rally. Take a look at the 1 hour chart. I just wanted to show you. I mentioned 1797. Here's what happened yesterday. Right here at the end of close, we literally tapped it by 50 cents, and then we came back up again and rallied. So here's the hourly chart. Next area would be the next really big area is going to be 1775. You could even go 1775, 1785 here, right up into here. So 1775 to 1780, 85-ish area would be a good area of support. So keep an eye on that. But the real big key area doesn't come in until 1775. Got a little cluster here at 1785. But 1775 is really a big support area. That's going to be the next theme if we do break in the minis here in the ES. Okay, here's the GLD. As you can see, really sloppy chart, bearish symmetry here, lower lows, lower highs, broke the neckline, and again, I think it's headed for the 114.88 and maybe even lower. Okay, so again, no trade in gold. I do like gold short. If you can find an entry, gold will be a better short than being a buy for sure. Here's USO. As you can see, USO we have also bearish symmetry in USO, and let me just put that back here. We just hit that by accident. That is your gap area of resistance, and as you can see here, we did literally tap the 76 retracement from the high, from the low here to the high, and we popped right back above it. So a lot of support here. Definitely is grossly oversold, as you can see, and that's why we're really not selling. Let's see what happens if we can. Here's going to be the area is going to be 34.50. That's going to be the area. 34.50, you got major resistance above here. If we can break 34.50, which is its channel resistance above, then I think you're going to take a shot to the 50 to 200. Now, look at this here. We're getting the golden cross here to the downside, which is not good. So keep in mind, this is definitely a retracement rally, if at all. So this needs a lot of work to negate this bearish symmetry of lower lows and lower highs. And you see the 20-day in black just capping this whole rally. We need to get above it. We need to break above the 34.50 and then start to move higher. And then any pullbacks can be viable. Okay, until then, this is just a total retracement rally in USO and in crude itself. Spiders, as you can see, capped right now on the 2012 uptrend channel, the lower end of this uptrend channel. So again, a good pullback would be to the 177.62. Even here, we need a little bit of a pullback here. Otherwise, what happens is that if we do get a sell-off, the sell-off is going to be much more nastier, faster than any type of pullback that's been on a stair step. 3 days up, 2 days down, 2 days up, 3 days down. Something like that. Other than that, when you have just all up, you're going to wipe out all of these gains in 3 days. Diamonds, as you can see, same thing, up at the upper end of the Bollinger Bands, now looking for a retracement rally. And again, I think this is very healthy for the markets. What can I say about the transportation sector here? Really not doing much of anything, but now we're starting to get contraction here in our Bollinger Band, so something to keep an eye on. Now, the Russell, really took it on the chin yesterday. And remember, risk on. This could be a good gauge of risk when you're looking at the Russell here. When you see Russell really coming, can't break higher here, cap this with this rally. Now, a logical spot would be the 20-day and, of course, the 50-day moving average. So let's see Russell has continued weakness. If this thing does continue to sell off, Russell can easily take down the rest of the markets here. XLF, good, healthy, a little bit of a pullback here. A lot of the banks pull back, but again, it needs a pull. It can't go straight up, but this will get you a good entry to get in. We hit our target in Goldman Sachs. I wouldn't be chasing now. Goldman, look for some Fibonacci retracements back into the retrace back to at least the 50% area. If we can hold back this area for a continued move higher into 2014, like J.P. Morgan here, really took that overhang on that lawsuit. Now, I'd like to see it get at least back to the 20-day, start nibbling along here, and then get that reversal. And then, of course, we have the IGN starting to roll back down again. Again, this pattern is still valid, this bearish head and shoulders pattern, but now we got to break below the neckline here. And watch the technology. Tech has been very heavy. Aside from Apple breaking out here, now Apple, to me, a pullback would be somewhere in here, taking this uptrend channel up higher, which coincides nicely with the 20-day moving average. If Apple can get back above, even 435, any pullbacks in Apple should be bought, And then lastly is the Qs. Okay, as you can see here, Qs way extended here. So we have an extended market, we have an overbought market here, and we're coming into the holiday season. Volume's going to be a little bit lighter, so moves are going to be sharper, whether it be to the upside and or to the downside. So remember, keep in mind, there's a lot of people long at these levels, and eventually they're going to start locking in some profits. Now, aside from the hedge fund managers and money managers here, yeah, they don't want to disturb their bonuses, but what happens if you're going to get some selling, they sure are going to lock in their profits. That's for sure going into the end of the year. Okay, guys, be safe out there. Remember, one day doesn't make a trend, but we are seeing some breaks here. And remember the Pomo auction early on, so I do think that you probably get some sort of a sustainable bounce here, or at least a dead cat bounce. And then let's see if we get that selling coming in late morning, early afternoon. If it comes in earlier and earlier, that means that institutions are starting to liquidate, at least locking in some profits. Have a great day. We'll speak to you tomorrow. Take care.